So let's shift focus to Container Corp, which has reported a strong third quarter. And the company reported the best revenue growth in 6 quarters, and the profits have also spiked as much as 55%. To discuss the earnings in detail, we're joined by Mr. V. Kalyana, the CMD of the company. Thanks for joining us, sir. And let me begin by asking you about the salient highlights of this quarter gone by, because it certainly looks like a very strong quarter for you. What factors do you attribute to this growth this time?
Morning. See, the factors are almost the same. The strategy what we adapted of building circuits in domestic and running double stack trains, emphasis on double stack with hub and spoke model with our terminal at Katwas. That is helping us in getting more volumes as well as increasing the margins and also giving a good customer service, because the containers are getting evacuated. The boxes from port are getting evacuated very fast. Compared to any other service, the service provided by Concur is giving a very fast evacuation from the port. And in fact, we are now trying to help out some of the other players where there is a problem of an evacuation. So we are doing that also. So it's good for the industry, because the fast evacuation always helps export importers. And also we added one extra hub point at Jakwada, where we brought in JNPT onto the double stack. That also has increased the volumes as well as helped in our numbers. And on the domestic side, let me tell you, the GST impact has come down. So the domestic is showing good growth. In fact, our growth in domestic is very good, around 17% growth we could see in the originating numbers this quarter.
Hi, Mr. Rama. Good morning to you and congratulations on good set of numbers. You suggested that the volumes were good. Could you quantify for us what exactly was the volume figure for both EXIM and domestic?
You see, this originating side, if I look at the domestic volumes have grown by around 8%, and domestic volumes have grown by around 17%. And overall, for the 9 months, the total EXIM originating growth is around 10%, and domestic is around 22%. Throughput on the company-wide, both EXIM and domestic combined, we are getting around 12% growth. This is what we forecasted at the beginning of the year, that we'll have around 12% growth in our numbers by the volume wise. The top line is also growing at 12%, but our margins are going better than this top line.
So my next question is
we expect the growth to be same in the next quarter also.
All right, sure. So my next question has to do with your outlook in FY19 as well. Can we expect this run rate to continue and perhaps improve as we move into the next financial year, with respect to volumes, that is?
That's a nice question, but normally we don't give a forecast of next financial year at this stage. So that I will be answering your question when I come back to you after my financial results for this financial year.
Okay, so
this quarter Q4 we are expecting good growth, and
yes, please go on.
Let me share another good news with you and all my investors. The bottom line, we have given a forecast of around 12% growth, but now we want to revise that, and because it is good growth, we are seeing that. Now we are revising our forecast. Maybe this financial year we will expect to 20% growth over last financial year in our bottom line, in our margins.
Okay, I'm just going to talk about your margins, sir. We've seen a good expansion in terms of your EBITDA margins for the current quarter to 27%. And this is despite of your employee cost more than doubling for the quarter. Could you tell us what was the reason for such a high employee cost?
The employee cost is one-off cost, because this is because of the pay commission. We implemented third pay commission for the PSUs, and the areas we paid from 1st of January of this year. Otherwise, the growth, the further years down the line, it will be the normal incremental increment what we give on every year, and some DA growth will be there. And the growth this year, we got additional revenue around, so that is, in fact, we could offset all this employee cost and could get good growth.
Okay, so before we let you go, what are your key expectations from the union budget this time around?
See, already the logistics has been brought into infrastructure status. So now we are actually waiting for the other incentives for the manufacturing industry and other trading these things. So because we are a service sector, we want the growth in the other sectors to pick up, so that the export imports, when they pick up, then that's beneficial for Concor as well.
So, there was just one more question. Does your capex guidance for FY18 still stand at about 1,000 crore rupees? And I'm not sure if you can give me your capex guidance for FY19, but I'm going to try and ask you that question anyway.
No, this capex one I can tell you definitely, because we have given a forecast of around 5,000 to 6,000 crores expenditure in the 5 years. And in fact, we are doing the first year, and we are almost on the course. We will have the fulfillment level of around 85 to 90% this year, but this will accelerate in the next 4 years, because all the projects we are now grounding, and these will take off next year. So the next year also capex expenditure will be in the same, or in fact it will be more than what we will do this year. So the expansion is on the course, and whatever all we discussed about distribution logistics centers we are going to set up, ILM JET we are going to start, which we already signed an MOU at Andhra Pradesh, all are on course. And touching target 100 by 2020 is also on course. We recently commissioned 2 MMLPs at Raipur and Nagpur. These new ones, there's a second ones in those places, and we are on course and commissioning another 3 to 4 in this year. So there's, yes, growth potential we are seeing, both in the terms of our infrastructure expansion as well as the addition of rolling stock and containers. We are adding 10,000 containers for our domestic business.
All right, Mr. Rama, we appreciate you joining us today, and all the best for the fourth quarter and also for FY19.